In the equity market, taking a look at the Dow Jones futures, December Dow Jones futures testing lows, getting down to 26,586 today, which is interestingly enough only two small points off of the lows we saw on Monday, which were 26,584. So we're clearly testing those lows. Dow falling late in the day, along with the other indices, and continuing to push down. It's hard to remember that the Dow is actually up 176 points at one point, almost 1% on the upside, 91 basis points to be exact, getting down on the lows 2%, then finishing the day down 1.66%. Dow has now reached what some might call soft correction territory. There's a lot of discussion about corrections. In the almost 3 decades I've been doing this, a correction was always 10% off the recent highs. But recently, say the last 7 or 8 years, people have been saying 8 to 10%. Well, as of the lows today, the Dow got down 8.48%. So I'll say that we're in soft correction territory for the Dow. The Nasdaq down over 11% from its recent highs now, and the S&P reached in that 10% correction range. So the major indices from correction to soft correction have all been achieved. And you could say that it's basically a general lack of positive catalysts that's driving the market lower rather than helping to push it higher, including disappointment from 2 days of testimony from Jerome Powell. No strong language that the Fed's going to do anything more. It's arguable whether they have anything more to do without fiscal stimulus, but monetary stimulus in place. The Fed's balance sheet until recently was actually shrinking. Over the last 3 or 4 weeks, it started to angle up again. But when you take assets that have actually rolled off through expiration or whatever else, the balance sheet was actually sinking. So a little bit of disappointment from the Fed in terms of what they've actually been doing, while Jerome Powell and the rest of the speakers have been saying we're here to do whatever the market needs. Right now, that doesn't seem to be working.